Imagine you've got $100,000 to put into the market, and you want to squeeze out as much income as possible without waiting years for your investment to grow. Well, right now, there are two ETFs that are catching everyone's attention in the high-yield space, MSTY and MSTW. One pays monthly, one pays weekly, and both are designed to throw off insane amounts of cash to investors. But which one is the better choice for that $100,000? And more importantly, which one actually makes more sense for long-term income? Let's break it down. First up, MSTY. That's the YieldMax MSTR Option Income Strategy ETF. It's not your plain vanilla dividend fund. It's built to generate income from MicroStrategy stock using an option strategy called a covered call. That means it owns exposure to MSTR, but it's also selling call options to collect premium income, which it then passes to shareholders as dividends. Now here's the kicker. As of now, MSTY has a trailing 12-month yield of about 140%. Yes, you heard that right. That's based on the last year's payouts compared to the share price. And speaking of share price, MSTY's last closing price was $19.33. Its last monthly distribution was around $1.18 per share, paid out on August 1st. If you run the math, that means for every 100 shares you hold, you pocket $118 in just 1 month. That's why people are flocking to this thing. The payouts look unreal. Now let's flip over to MSTW, the Roundhill MSTR Weekly Pay ETF. This is a newer player just launched at the end of July 2025, and it's also based on MicroStrategy stock. In fact, 74% of its holdings are MSTR itself, and another 15% is MicroStrategy call options. So yeah, it's basically a pure MSTR income machine. The difference? Instead of monthly payouts like MSTY, MSTW pays you every single week. The last closing price was $47.44, and the most recent distribution, which will be paid on August 12th, is around 79 cents per share. That's after its first announced distribution in early August, which was around 86 cents per share. Its trailing yield can't be measured over a year yet because it's brand new, but Roundhill is already listing its distribution rate at 86.2%. And with assets under management sitting at $39.34 million, it's definitely a smaller fund compared to MSTY, but it's already making waves. So let's run the $100,000 experiment. If you took $100,000 and bought MSTY at $19.33, you'd get roughly 5,173 shares. Now, using the latest payout of $1.18 per share, that's about $6,100 in 1 month. Keep in mind that these payouts vary month to month, but if we annualize that number, we're talking around $73,000 a year in income. That's almost your initial investment in pure cash flow every 16 months. Now let's do the same with MSTW. At $47.44 per share, $100,000 would get you about 2,107 shares. With the latest payout of 79 cents per share, you'd get about $1,664. But remember, that's per week. Over a month, that's roughly $6,600, which is actually a bit more than MSTY's latest monthly payout. Annualized, you're looking over $86,000 in potential income if the distribution stayed at this level. So at first glance, MSTW looks like it might edge out MSTY in total payout, at least based on the current numbers. But here's where things get interesting. Both MSTY and MSTW are heavily tied to MicroStrategy's stock price. That means if MSTR goes up, both funds will benefit. But if it tanks, your capital will take a hit too. And because these ETFs use covered call strategies, your upside potential is capped. You won't get all of the gains if MSTR skyrockets, but you will still collect those juicy premiums. The other thing? Those huge yields. Whether it's MSTY's 140% trailing or MSTW's 86.2% rate, are not guaranteed forever. If MSTR's volatility drops, the option premiums will shrink, and so will your payouts. That's just how the game works. Another difference, MSTY's monthly payout is nice for people who like a steady, predictable income schedule. MSTW's weekly payout is a dream for anyone who wants a constant stream of cash. Imagine every Tuesday or Wednesday, money just hits your account. That's a psychological win for a lot of income investors. Now there's also the size difference. MSTY has been around longer, it's more established, and it has way more assets under management than MSTW, which is still in its infancy. Larger AUM generally means more stability and liquidity, but smaller funds can sometimes adjust faster to market conditions. So, if you're asking me why someone would sell MSTY and even MSTR stock to buy MSTW, here's the reasoning. 1. MSTW is paying weekly, and right now the numbers are competitive with MSTY. That's a big deal for investors who want more frequent compounding or just like that steady flow of cash. 2. By holding MSTW, you're still getting the MicroStrategy exposure, but you're also in on a brand new product that could attract a lot of attention as the weekly pay trend grows. If Roundhill manages this well, MSTW could pull in way more assets and potentially get even better liquidity over time. 3. For pure income chasers, the psychology of weekly cash is unbeatable. You don't have to wait a month to reinvest or spend your dividends. It's like a paycheck that never stops. Now, here's the other side of it. MSTY is still the absolute beast in terms of trailing yield. That 140% number is not something you see every day, and for investors who trust YieldMax's track record, it's still one of the top options income ETFs out there. Plus, with a lower share price, it's easier for smaller investors to build a position. The decision really comes down to this. Do you want to stick with the higher established yield and bigger fund in MSTY, or do you want to jump on the new weekly pay train with MSTW and potentially edge out a bit more income? If I had to break it into personalities, MSTY is the veteran high-yield monthly payer. It's proven, it's consistent, and it's pumping out cash like crazy. MSTW is the flashy new contender. Smaller, faster, and giving you that weekly hit of income. And honestly, there's a world where you could split your $100,000 between the two. Get the monthly beast on one side and the weekly newcomer on the other. That way, you're diversifying your payout schedule while still milking MicroStrategy for all it's worth. At the end of the day, both of these ETFs are income monsters, but they're not without risk. The underlying stock is volatile, the payouts depend on that volatility, and there's no guarantee next year's yield will look anything like today's. But for now, if high yield is your game, MSTY and MSTW are two of the most exciting players on the board. So, if you had $100,000, which would you choose? The monthly powerhouse or the weekly payday? Drop it in the comments, and don't forget to like, subscribe, and join the Money Stick Unfiltered crew so we can keep breaking down the wildest corners of the ETF world.